This is the final warning sign and an omen that nobody could save fiat currency or the almighty US dollar from total collapse. And now, this one action from government may be an indicator of what truly was the last straw to break the camel's back. Because not even one of the most brilliant and efficient minds of our generation, Elon Musk, could stop our government from creating larger deficits, working around the clock for months. Elon and his team of young brainiacs were able to save the US taxpayers hundreds of billions of dollars. That is until May 28th of this year when he resigned from Doge. His main concern being that Doge would be taken seriously and achieve savings. However, the Trump administration restricted him down to what he believed was nonsense like USAID. Then Congress refused to vote to even stop that kind of spending. And during Elon's tenure with Doge, they managed to save the American taxpayer a reported $214 billion in wasteful spending, most of which happened between the months of January to August. Since then, things have really been scaled back on the Doge front, and the government has added a whopping $2.1 trillion to the deficit, or about $207 billion per month, which is setting the USA on a fast track for currency collapse. In other words, Doge never made a difference, which is why I believe Elon realized governments and efficiency will never belong in the same sentence. That's why he was fighting a losing war and so decided to call it early and retreat. Then in another blow, just the other day, it was announced that Doge, the Department of Government Efficiency, would shut down completely while the deficit continues to spiral out of control at accelerating speeds. Now, we recently did see Doge respond to this announcement from Reuters saying that it is fake and that Doge is still working and eliminating wasteful contracts and spending to the tune of $335 million last week. But even if you were to add that up, it's actually quite laughable because it's a drop in the bucket relative to the $206 billion they're adding every single freaking month. Which means Doge runs like government, highly inefficient. No amount of history or common sense has seemed to make its way into the halls of DC, and any time any one of these voices rise up against it, like Elon or the old Rand Paul, Marjorie Taylor Greene, Thomas Massie, and a few others, all of Washington and the media wants to crucify them. All while the politicians cater to the extremely wealthy through continued inflation, backdoor deals, and funding unnecessary wars to enrich contractors, their largest shareholders, corporations, and by their influence in foreign nations. And since World War II, this has created an uncrossable chasm between the super rich and the poor while decimating the middle class. Even going back to Richard Nixon in the 70s, you can see that the deficit continues to grow based on inflation. Now, in an article from Michael Green, the chief strategist at Simplify Asset Management, he shared some shocking numbers that paint a dystopian future that can be repaired, a matter that will be accomplished with extreme difficulty. And in it, he states that everything changed between 1963 and 2024 based on what our government defines as the poverty line for a family of four or less, which determines whether they receive government benefits, free money from other taxpayers. Now, this is important because it either incentivizes people to remain in poverty for fear of losing benefits or de-incentivizes anyone to work harder beyond $40K per year because those people may lose their subsidies and benefits. And why would anyone want to get an education or work harder to earn less and work more? This creates friction in the middle class and lower income because at the end of the day, it doesn't feel fair and it isn't. Maybe this is why millennials and those younger feel betrayed by the system. It truly is far more difficult to access what boomers did even when adjusted for inflation. He goes on to state that the official poverty line for a family of four in 2024 is $31,200. The median household income is roughly $80K. We've been told implicitly that a family earning $80K is doing fine, safely above poverty, solidly middle class, perhaps even comfortable. But then he actually calculated all the average numbers nationwide and found that in order to actually live middle class due to inflation right now, a family of four would need a gross income of at least $136,500. So in other words, at an income of $65,000 per family, not only does the family lose their subsidies, but they are well below comfortable and arguably in poverty. But the government doesn't define it as so, which means one thing: 140K is no longer rich. It's not even middle class. It's literally the survival line, which speaks volumes about just how bad our current inflationary monetary policy is. Now, this is no new phenomenon. This happened under the Obama administration, it happened under the Biden administration, and now it is continuing under the Trump administration. Same story, different tune. Bloated budgets, blatant corruption, and inflation. It's a story as old as humanity and currency. This is the natural order of governments and the humans who decide they are smart enough to run them, leading to lifelong terms and, more often than not, unchecked power, even in systems with checks and balances. However, at some point, the chickens will come home to roost. Then where does wealth go? What's a safe place to store it? Does capital and wealth make a flight to digital currencies in the event of fiat collapse? Do they now see why crypto is so valuable, which would lead fund managers and even sovereign entities to allocate more of their portfolios to major cryptos like XRP, Bitcoin, and Ethereum? So I'll be covering this, as well as the recent hostility towards crypto that JP Morgan, the most important systemic bank in the nation, recently displayed by debanking one of crypto's greatest minds and proponents, Jack Mallers, CEO of Strike, and what this has to do with what's really going on behind the scenes and how this will affect the price of crypto and XRP moving forward. So let's dive into the video. And as always, my friend, if you're feeling blessed and bullish, comment 777. And if you're going to be the wealthiest person in your family tree, smash the subscribe button. Hello and welcome back to the Bull Runners channel. If you're new here, my name is Paul. You can find me on Twitter or X at PauliDeFi, PauliDeFi. The first thing I want to cover is the fact that this is a true sign to the end of fiat currency, whether it happens, let's say, this decade or maybe even a few decades from now. Heck, even into the next market cycle. I don't think we're going to see the collapse of fiat just yet, considering right now the United States government and their hegemony with the US dollar is still very much a major portion of the global economy. Major countries and other countries and participants still want to earn in the US dollar. It still holds value better than a basket of other currencies worldwide, save a few. That said, this is a sign. The fact that the Department of Government Efficiency has been shut down and quote unquote no longer exists. And this was according to a Trump administration official, which is quite interesting because then basically the next day, Doge itself on their X account posted that this is fake news and that Trump was given a mandate by the American people to modernize the federal government and reduce waste, fraud, and abuse, which is totally fine and fair. And if they did find last week another $335 million, bravo to them. But at the end of the day, when you are truly adding an extra $6.5 billion per day over the last 326 days in a row, this is not even just a drop in the bucket. It's really laughable and ultimately won't make a difference. And that is the sad reality, is that our government is just too bloated, and not even a mind like Elon Musk with all of his money and influence can stop it. The national debt increased from $36.2 trillion to $38.3 since January, which is absolutely insane and arguably going parabolic. So even with the tariffs, we have to see what this is going to do to the United States dollar and how it's going to affect inflation, which is going to cause the Fed to have to respond, right? At the end of the day, if inflation continues to increase over the next couple of months, then the Fed is going to have to respond by keeping interest rates higher. But as they continue to keep interest rates higher, it's likely going to cause more fear and panic into an already weakening and shaky market, causing the market to dump or collapse even further. And they're going to have to then respond, because unemployment numbers are going to continue to rise, by lowering interest rates. In other words, everything in the current situation is truly a lose-lose-lose situation. Our Federal Reserve under Jerome Powell has done too little, too late. Our current government is still spending trillions and trillions of dollars, adding to the deficit. And I don't even think at this point tariffs are enough to save it. So at some point in time, again, as I stated in the intro of this thing, the chickens are going to come home to roost. And that's going to look like higher inflation and prices. It's going to look like a collapse in the middle class, which we've already seen. It's going to cause more disparity, and arguably it's going to create a disparity so great that it could potentially even lead to a future civil war. As Plutarch said it best, an imbalance between rich and poor is the oldest and most fatal ailment of all republics. And we have to remember the United States is a democratic republic. In other words, if I've ever been more confident in a flight of capital to other currencies, and arguably away from any fiat currencies, even if we have up-and-coming nations, at the end of the day, the Doge legacy is not one that it succeeded, but it destroyed faith in real cost-conscious government, faith in careers of committed government employees, faith of scientific research and biomedical breakthroughs that come through it, and faith for countless of lives of the world's poorest. And this isn't me trying to be socialist or negative. At the end of the day, this is just the reality of fiat currencies, which is why I'm so confident that crypto is not only here to stay, but more money over time will flow into crypto, even with a bit of volatility or downside into the next year. And so maybe that's why one of the most systemically important banks in the world, and one of the largest, which has direct ties to the United States government and the Fed, recently decided to shut down Jack Mallers, who is a major proponent of Bitcoin and crypto, and basically sent him a letter that he decided to frame stating, "We have decided to close your accounts." It almost feels like it's a war on crypto again. And this is something that Eleanor Tourette recently posted by retweeting Senator Cynthia Lummis talking about Operation Choke Point 2.0, which regrettably lives on. Policies like JP Morgan's undermine confidence in traditional banks and will likely send digital asset industries overseas. Now, we thought there was already an end to Operation Choke Point 2.0, essentially where the Fed or actors inside of government were reaching out to banks, telling them that they had to debank anyone who was involved with crypto, whether it was through on-ramps or off-ramps, but that doesn't seem to be the case because they literally gave Jack Mallers no reason for closing his accounts. Now, this is where things are getting a bit sticky because JP Morgan did decide to continue banking Epstein after the fact, after they knew everything that he was doing and involved with, which has been called out. But when they abruptly closed the personal bank accounts of Strike CEO Jack Mallers and didn't provide a clear explanation, everyone went and erupted online. Basically, he stated online last month that JP Morgan Chase threw him out of the bank, which was bizarre. His dad has been a private client there for 30 years, and he then continued to write his only response from them was that they weren't allowed to tell him. Think about the transparency of that, and then think about the blockchain and crypto, which cannot be anything but transparent, which is why we like crypto so much, because there is a layer of transparency where you can't just have some regulated entity who has private interest to go throw you out and say, we don't have to tell you anything. And so essentially this has created a new war with crypto, Bitcoin, anyone who loves the space, to shut down accounts with JP Morgan, and already we're seeing it all over online. At this point in time, there truly is a major divide between those who think crypto is the future and those who are totally fine being robbed of their wealth living under the old system. And at the end of the day, all of these entities seem to be more and more corrupt. It's just we find out about it later, as even Ron Wyden posted that their staff is releasing a new report showing that JP Morgan Chase executives all the way to the top enabled Epstein's sex trafficking operation, which is absolutely insane, but it does not shock me anymore. And so as I see things now, at the end of the day, whether or not all of this information is true or whether there's a silver lining, nobody, and I mean nobody, actually trusts government anymore. They might trust an actor or two. You might like Trump, you might not like him, but nobody trusts government anymore, and nobody believes that they can truly be efficient, which leads me to believe and adopt the theory that the only efficiency currency at this point in time, the only religion we need to have when it comes to currency is going to be that of blockchain, which is truly transparent and incorruptible as long as you have a decentralized network. And so that leads me to believe that there will continue to be a flight of capital into digital assets over the long run, even if we have officially entered a bear market. And now I'm about 95% sure we have, which means we do need to reclaim the 40-week moving average. And the reality is this is the very first time since the prior breakdown for a bear market that we've been below this moving average, and it's flatlined. As you can see, we're flat over here on this line versus having a nice steady uptrend where we did break down one time right here. Yes, we had a wick here, but we broke down one time here only to see a bear trap and the market rally and recover right back above the line. Similar thing happened right here in March of 2025. Would have provided a good dip buying opportunity. But now that we are far later stage and we spent more than 90 days above the range into a nasty breakdown where Bitcoin hit about $80,000, this leads me to believe that this is now going to act as a major resistance. So if we're to rally and recover, looking at that daily time frame, I do believe we are in for some sort of a relief rally. At the end of the day, I don't see Bitcoin breaking out above 100K or even 103K into this relief rally. And if we do, then that would be a great time to start entering the market into some strength. But this leads me to believe that the bull market is over for the entire year, which will carry over into the rest of the crypto market. As you can see, all charts look very similar. Some look a little weaker, some look a little stronger. But in a general sense, if Bitcoin is trading heavily down, so will the majors. And XRP has done the exact same thing, putting in a series of lower lows and lower highs. The most recent low came down to $1.83, currently sitting at 225. Very much possible we come back up to the 240 range, maybe even 250 on some serious strength. But into these ranges right here, you're going to experience some level of resistance, especially if Bitcoin continues to break down for further lows. And as you can see here, even on the 40-week moving average, again, similar story, right? Supported right here in June before rallying for its all-time high. Since then, breaking down, seeing this thing roll over. The fact that if you look at Bitcoin and that daily time frame, heck, even the weekly time frame on the RSI, you can see that we put in an all-time high back in 2021. But again, right here in 2024, high, new lower high, and even further lower high. So we've had 4 major points of a divergence in terms of relative strength. We've seen higher highs on the price going all the way back to here. You can see right here where I'm aligned perfectly, and I'll go ahead and remove the volume, while at the same time seeing lower highs on the RSI, but higher highs on the price, break down below. To me, this is indicative of a true trend. This is officially a bear market now, and arguably anything below 25% typically is, which leads me to believe that sometime into the middle of next year, we're likely going to continue to see the price break down for further lows with some relief rallies in between, like it happened over here. But you can even see back in 2021 when we actually broke down and rallied back up to this range on the 40-week moving average, we sold off almost immediately with this tiny little bull trap for further lows. Very much possible that happens here. I do believe we have far more institutional support, which leads me to believe that instead of breaking down maybe, I don't know, 75%, 70%, Bitcoin could break down between 50 to 65%, and things like XRP could break down a little bit further, potentially down to at least the 125 range, if not just under $1, back to like 90 cents, which would act as some range of support considering we have quite a bit right here. So seeing this type of price action, dips are not for buying. I'm currently not FOMOing. I actually bought a small little dump right here, but I'm only holding it, and I would only recommend this for anyone who's very comfortable playing these types of ranges or a bit more far along in terms of how they've been investing, maybe isn't worried about losing capital or watching the price break down further. Me personally, I don't think this is safe for the majority of people to take. It's a lot safer to actually place shorts in the market or sell into these rips, right? You can buy the dip, but at the end of the day, if you're not selling the rip, this is where the money is going to be made in a bear market. Being short in a bear market is extremely crucial to creating income for yourself so you can invest in the future, which leads me to believe, well, what are you talking about, right? You're saying that the dollar is going to collapse and at the end of the day, money is going to flow into crypto, which might be true. At the end of the day, it's still a theory, or we might still be early because a lot of asset managers might not put money into crypto right away if everything is dumping, including gold. But over time, I'm talking from an investment thesis standpoint, over the next 5, 7, 10 years, buying any dips on crypto would be wise. But what if you could buy a little bit lower? And that's what I believe is going to happen. I believe we're going to see a further or a deeper sell-off, and buying dips on, let's say an XRP anywhere from 150 and lower would be really wise. Similar fashion with Bitcoin. If we see a dip right back down to, let's say, 77,000 or even 65,000, anything in those ranges or lower is going to be the dip buying opportunity of a lifetime, because over the course of our fiat currency, the dollar, we are going to continue to see it collapse and debase against digital assets. So if anything, a bear market right now, although it might suck for some of you, if you learn how to short the market, you learn how to trade the market right in these current market environments, you're going to be happy you did, because you can invest or use that income to invest for the future. Now, speaking of investing for the future in terms of a retirement account, if you want to invest in, say, like your 401k, or roll it over into an IRA or a Roth IRA in any one of these crypto markets through I Trust Capital, which is one of our partners and today's video sponsor, which helps us to fund value-based videos like this, then go ahead and check that link out in the description below. But not only can you invest in the majors like Bitcoin, Ethereum, XRP, Solana, and again, these are going to be the spot asset where you can self-manage them. At the end of the day, there are far more assets that you literally just can't find anywhere else inside of these tax-advantaged accounts. Things like Chainlink, Zcash, XLM, Hyperliquid, which has been crushing it this year, World Liberty Financial, and a million of other names. And they're always adding support for new names and all sorts of different cryptos with different narratives like AI for the future. And when you sign up through our link and get funded, there is a special offer of an extra $100 funding bonus. So go ahead and check that out by clicking on the link in the description below. Also, if you're wanting to short the market and take advantage of some of these plays into the end of the year and the start of next year, then you're going to want to create an account through our link with Blowfin, where you can short the market and take advantage of a bit of leverage. I don't recommend a ton, but I do recommend you check the platform out, because they offer all sorts of really cool features, also like copy trading, where you can essentially put your portfolio into an account that you still own and manage and can always withdraw from, but it will literally copy the trades of great investors or traders that are outperforming the market, and you can get up to a $5,000 bonus when you join today. So go ahead and check that link out below. And finally, if you're wanting to be in the camp or the group of people who really manages the risk well, only risks a small amount of money to have access to other people's money in order to trade a large account and keep the majority of your profits, go ahead and check this out.
What if you could trade with $100,000 without ever risking any of your own capital? Well, I'm doing it right now, trading a 100K funded account with zero of my own money on the line. I just paid a one-time evaluation fee to take a trading test. That's it. Because everyone's been asking us, how do I get crypto loans? Or how do you leverage trade without risking any of your own capital? Well, that's exactly why we're leveraging Breakout, which is a crypto prop trading firm recently acquired by Kraken, with over 10 million clients, 2.5 million funded accounts, and over $1.5 billion in revenue in 2024 alone. They will fund you up to $200,000 after passing one simple trading test. And you get to keep up to 90% of the profit, and you can withdraw in USDC 24/7 after passing the trading test through the link in the description of this video. Now, here's the problem that I've seen most people face. Let's say you're trading with $10,000 of your own money. That's your rent, that's your groceries, that's an emergency fund. And one bad trade or black swan event and poof, your account is completely blown. Rent's late, savings is wiped, and your family is stressed out. So you're not trading to win. Trading your own money is trading for survival, whereas trading with 100K of risk-free capital is freedom. In fact, if you only have $10,000, you should never be trading with all of that. Instead, if you took just 10%, which is $1,000, and you buy the 100K or the 200K breakout test, and you pass the test, well, you're going to be trading with six figures without depositing or risking any of your own money. This is what I'm doing right now. And if you fail the test, you only lose $1,000 instead of your $10,000 because you shouldn't even be trading with $10,000 of your own money in the first place if you can't pass a simple $1,000 trading test. And the best part is there's no limit on retries. So that $1,000 can give you 10 shots at a 100K account if you fail the first few. That's 10x better risk management. And that's how you prove you actually know what you're doing. And this is the smartest strategy that the best traders in the world use. That's OPM, other people's money. You pass the test, you trade Kraken's money, and you get to keep up to 90% of the profits. And you can withdraw USDC on demand 24/7. So I paid, I passed, and now I'm trading 100K, and it only cost me $1,000 rather than risking $100,000 of my own money. And now it's your turn. So do not buy the small test. You're here to scale your portfolio fast. So here's exactly what you need to do right now. I left a link in the description of this video, and when you click it and select the classic one-step 100K or 200K account test, you simply click start trading, and then you enter in the affiliate code 777 on your checkout to get the maximum discount on your 100K or 200K funded account. And make sure to check the add-on box for the 90% profit split. It's only $100 extra. It pays for itself in your first payout, and if you skip it, you're leaving 10% on the table forever, so it's well worth it. Then you simply pay for the test, you pass it, you have an unlimited time frame, and you get to keep up to 90% of the profits. And again, you can withdraw in USDC anytime that you want after you pass the test. That's it. Now, we do earn a small commission when you use our code 777, but it supports value-based videos like this, and it'll help you get the maximum discount on your 100K or 200K funded account test. So click the link in the description right now, take the test, and let's get you funded.
So that is it for the video, folks. If you enjoyed it, be sure to subscribe to the channel and also check out the links for any one of these resources if you're wanting to learn or earn with us on the channel when it comes to your crypto portfolio. Until next time, I will see you in the next video. Goodbye, my friend.